Hi, this is Tom Sedlak, General Manager at 33rd Company Property Management. Thanks so much for watching our video podcast series. Today's topic is landlord insurance. Do you need it? Who has it? What kind of coverages are available? What is appropriate for me? When it comes to single-family homes, there really are two insurance packages that are most appropriate for a rental. That's called a landlord rental property insurance or a rental dwelling policy. It's also called a DP3 or a business owner policy, and that's for the owners. And then for the tenants typically get a renter's insurance policy. That's a much less expensive policy, but only covers the personal liability of the tenants and their personal property, but not the structure. For the property owners, though, it's very important to have not only a good rental dwelling coverage policy, but to also understand what the risks are and make sure that your policy extends to those various risks. And we'll talk about those today. Not the least of which, of course, is the structure. When you buy typical structure coverage, you want to make sure that you have an appropriate replacement cost coverage so that if your investment property does burn to the ground, that you can rebuild it and rebuild it to a current or better standard than what you had. Another really important topic for landlords is loss of use coverage. Loss of use coverage basically means that if a home becomes uninhabitable or unavailable because of an insurance claim, you're effectively going to have an extended vacancy, an unplanned, unwanted extended vacancy that's going to hit you right where it hurts, which is in the wallet. Loss of use coverage essentially kicks in whenever there's a catastrophic insurable event that will pay you for the lost rents and income that you would have ordinarily received had that event not occurred. So loss of use coverage is the first question you should ask your insurance policy agent, regardless of the type of policy, is what are the limits and what are the coverages for loss of use if there is a catastrophic event. The next one that's sort of in line with that is a vacancy addendum. A lot of times when tenants leave and you're advertising and looking to place a new tenant, you may have a short vacancy between tenants. Sometimes that short vacancy can extend to a couple of weeks. It could be a couple of months. A lot of policies out there have what's called a vacancy exclusion. So if your property is vacant for more than 30 days for some policies, sometimes it's 60 days for others, your actual coverage for the home lapses. And it's not just your rental portion of the coverage, but your structural coverage as well lapses. Insurance companies do not like vacant homes. They are prime targets for crime, for copper theft, for intrusion, break-in. There could be a water leakage incident that could go unchecked for weeks, causing extensive structural damage. Effectively, a vacant home is considered an extreme liability by an insurance carrier. And in fact, if you do have a vacant home, the first thing you want to do is look at your policy, see what the coverage limit is, whether it's 30 or 60 days, and if you do get to that 30 or 60 day period, immediately call your agent and ask to purchase a vacancy addendum. And that addendum will continue your coverage, albeit it'll be a very expensive price, but at least you'll have coverage during that vacancy period in the event something catastrophic were to happen. When you do have tenants in place, personal property may also be damaged. And I'm not talking about tenants' personal property, but personal property that's not part of the actual structural portion of the dwelling. And that could include a refrigerator, washer, dryer, those types of things. It's called in the real estate world chattel. And basically what it is it's any unattached property that could be stolen, could be broken or damaged in an ancillary fashion if there is another claim. And you just want to make sure that you're fully covered for that. Typically for a single family home with those basic multitude of appliances, you'd be looking at $5,000 to $10,000 worth of personal property as an addendum to your base rental dwelling policy or DP3. As far as liability goes, you want to make sure that you have good general liability coverage for your rental property. We recommend $1 million of umbrella liability coverage that will cover any physical injury that occurs on the property. And that could be an inspector, that could be a tenant that is a prospect looking at the property, it could be a tenant that's in place, it could be city inspectors, it could be any number of people, even guests that a tenant has over that could be injured while they're on your property. You want to make sure you're adequately covered, and $1 million worth of GL will help you sleep at night. It might be a couple $100 per year. to get that $1 million worth of umbrella coverage, but it's so worth it in the end, even just for the peace of mind. Typically, most property management companies will require that they be listed as additional insureds under that rental dwelling coverage, and the reason is because they're taking on liability as well. They didn't build the house, they didn't put the stair rail on the wall, for instance, and don't know whether it's screwed into the studs or just the drywall, and it could pop off under normal use. There are a lot of liabilities and risks that property management companies won't assume, and this would be one of them, obviously, in a rental situation. So you want to make sure that you are in compliance with your management agreement and you do list that property manager as an additional insured. So if there is a liability, you and the property manager and the insurance attorneys will all be sitting at the same side of the table in the courtroom if there is litigation. You should definitely contact your insurance professional for more information on rental property coverage to ensure that you're fully covered for all of the risks and issues facing rental property owners. Thanks so much for watching this video podcast. We hope you found some interesting information, and thanks for listening.